We have two of the crucial people behind, well, taxation in general, so they're the right people to have to talk to us on the day the budget came out. The Chairman, Central Board of Direct Taxes, Shri Sushil Chandra, and the Chairman of the Central Board of Excise and Customs, Mrs. Sarna. Thank you both so much for being with us. So direct tax and indirect tax is roughly the way to break it up. Just wanted to get you first, Mr. Chandra, some of the key issues around this. I mean, middle classes are not often happy. Even right now they're saying, well, perhaps you could have got more concessions. I guess there is always that pressure between having to raise revenue and what you can give to the taxpayers. Do you think enough was done for the middle classes in this?
I think enough has been done for the middle class. Right from the time when the government has come. If you just take it earlier, the limit of ATC deductions was 1 lakh, which was increased to 1.5 lakh. Then the income tax limit was increased to 2.5 lakh. Last year, we reduced the entry rate at 5% for the lower income group and the middle class group. And 5% is the lowest in the world. This year, we found that the salaried class has not been given enough benefits. Most of the salaried class is the middle class persons. I think you will agree with that. And that is why we gave a flat standard deduction of 40,000 rupees to all salaried class. Besides that, we have given benefits to the senior citizens, and that is a very big incentive which we have given. Earlier, only the interest up to 10,000 rupees was exempt in their cases, and now we have increased it to 50,000 rupees to the senior citizens. And in all investment, whether it's an FD or whether it is in post office or in recurring deposits, we have increased their insurance limits from 30,000 to 50,000. And critical illnesses from 60,000 to 1 lakh rupees.
But that 1% education cess will hit everybody.
That will definitely. That is a cess on the tax. It is not 1% on the income. Yeah. So where I am giving a benefit of 40,000 rupees and these benefits, 1% cess, I think, is not too much.
So it's 1% on the tax that they are paying.
On the tax, actually. So that is to be clarified very clearly. The 1% is not on the income. 1% is on the tax. So that comes quite less, even if it is a 30% tax, and if you take 1% of that, it is quite less for that matter.
Okay, Mr. Sarna, let me just come to you. With GST, a lot of the big questions about taxation, in a sense, move from the Central Board of Excise and Customs, and from that, in a sense, into the GST Council. So it's really on customs where a lot of the tweaking can possibly happen.
Yes.
Is that a structural change we should get used to now?
Absolutely. I mean, all the decisions on GST have to be taken by the GST Council. And since it's consisting of all the finance ministers of all the states, it's really like taking everybody on board, including the centre. So yes, a very big burden off, but sometimes we almost feel we're doing mini budgets every 2 months because most of it is covered there. And yes, this time for the budget, it was largely on the customs laws and the customs rates.
So on the customs rate part, some people have sort of scratched their heads and said, well, hang on, imported cell phones are more expensive, imported toothpaste is more expensive, and so on and so forth. Imported raw cashews for some reason are cheaper. So why? What have the cashews done to us that they deserve particularly good treatment?
Let me come to the cashew part first. See, the cashew industry is such that there is a lot of processing that is done in India. And the quantum of growth of cashew is not enough to meet the requirement. And there is a possibility of doing a lot of processing in India which can generate employment. Right. So it was decided that if you reduce this and you allow more cashews to come in the raw state, you would be able to actually generate employment in the processing area. So that was the idea. And on the other part, when I come to several number, I mean almost...
And the logic of higher imports on imported cell phones, is it a way of telling Apple, for example, come and make in India, stop sending iPhones to us from abroad, come and make the iPhones in India?
Let me tell you that most of the changes that were made in the increase in rates, and out of a total number of almost 50 items that have been covered, 45 of them are actually on the increase. And almost all of them, except for very few which are addressing inverted duty structure or something like that, by and large, it is all about Make in India. So definitely there is a big push for manufacturing. There is a big capability in India, but unfortunately they need the environment to be able to do so. I think with this budget and with these changes, there should be a sufficiently good environment for manufacture to grow and to actually make India a manufacturing hub of a lot of items which you will see in the list.
Right now, of course, the big question that I'm sure you must have been expecting to be asked non-stop, capital gains tax.
Yes.
Are you somewhat relieved when you see the stock market reaction? Because everyone had said, if you touch the capital gains tax, the stock market, the Sensex is going to crash 1,000 points. It ended up flat to down.
Yes,
It's more or less flat. Yes. Were you somewhat relieved? Were you somewhat nervous, by the way, when as that announcement came, the Sensex crashed 400
points.
Did
yes.
you say, oops?
Oops. Definitely. But we had already thought about it, that when we are putting a 10% tax on the long-term capital gain, so we grandfathered all the gain which has happened till yesterday.
Yeah.
That was a big move and a big consideration for that, because we have already said that long-term capital gain tax is not available on the long-term capital gains. So we grandfathered that, meaning thereby that all the gains which have been risen till yesterday will not be subjected to long-term capital gains if it is held by that time.
And all hell would have been probably broken loose if you hadn't done that, because
Yes.
somebody could have said there is retrospective taxation.
Yeah,
once again.
definitely.
Because
So
I
we-
bought equity assuming that it's free of long-term
Yes,
capital gains, and now
definitely.
suddenly you're charging.
Definitely, because the government is very clear that no retrospective tax will come at all. So we took that into consideration, and therefore we put a picture also that there's a unclaimed, untaxed long-term capital gain was 3,67,000 crores.
So here's an interesting question. So the way you're going to do this is you're going to freeze the prices as of yesterday,
Yeah.
and you're going to say now any further gains on top of that is what is going to get taxed for long-term capital.
For now.
Not till now.
Not till now.
So, but in a sense, that entire gain that we've seen so far, till 36,000 Sensex,
Sensex.
that pretty much has been tax-free now. So it's only above
Yes,
this that you
above
get
that,
taxed.
definitely. And the short term remain with same tax rate of 15%. So that will remain. And till now, it is absolutely grandfathered.
However, there are people who will point to an anomaly. They will say that when you were introducing STT, the short-term, the security transaction tax, you said that this is going to be in lieu of long-term capital gains. Now, that is there, and you added long-term capital gains, so...
But STT is a very small tax which we are taking as a 0.1% of the purchase and sales. And basic purpose was to track it also, that all the share transactions should be tracked properly. And if in now, I would say that considering the return and the appreciation in this market, after putting a 10% the long-term capital gains, also this is quite beneficial and is quite less.
Okay. And on the question of overall import duties, you must have seen what Donald Trump has been saying and others have been saying, that are we heading for protectionism? Are we heading for trade wars? When they hear about things like increasing import duties on imported cell phones and all of that, are you at all concerned that those issues will re-rise? And you could have the Americans, for example, saying that, India is playing protectionist economics.
It's not like
Not that they don't do it, but...
Sure. I mean, it's not like it's not come to mind. But let me just say that the items that we covered are those which really need to be covered for progressing in the manufacture in India. You have to start somewhere. It's a hard decision. But I don't think the number of items or the quantum or the amount of duty you're looking at is not something about a huge revenue gain or something. This is totally related to pushing for Make in India, allowing for domestic addition in terms of value, and the capabilities being there need to be tapped. So I don't think on these items, and the number that we've taken also is that big to really cause such a concern.
Right. Mr. Chandra, I just want to come to a slightly broader issue. And, having been doing budgets for, 15, 20 years, it's very interesting that whenever you go out there and you start talking to people, including those who are outside the tax net, whom you are trying to draw into the tax net, okay, there are some people who will be outright crooks. They don't want to pay tax. They'll come up with all sorts of elaborate ways to avoid paying tax. Let's set them aside. You should go after them. You should find them. They are, in a sense, causing damage to the rest of us and to honest taxpayers and to the nation. So that's absolutely fine. You will have a lot of people saying that the reason I want to stay out of the tax net, or I don't want to engage with the tax system, is just the hassle, it's the headache, it's the compliance problem. It's the fact that once you get into the tax net in any way, indirect or direct, I'm going to come to the same question for you, also with GST. Once we come into the tax net, we're going to be facing harassment. There'll be inspectors, some sort of hassle, questions being asked, forms having to be filled up. I don't want to pay the headache. I don't mind paying 10%, 20% tax, but I don't want the headache, I don't want the hassle, I don't want the harassment.
I think this was the notion earlier. Now we have developed so many good systems that these things are absolutely ill-founded. Like I'll tell you, that all returns are filed online. You need not to come to the department. All processing, that is your credit of the bank accounts and the refunds, that will go to the bank account. You need not to come to the office. Similarly, when the assessment is picked up for scrutiny, it is not anybody's choice.
Right.
This is absolutely done with the computer system, considering the risk elements. Even if I don't like a person, I can't take his case in scrutiny. This power is not with anyone.
It's
so
the
no
same
human
thing.
interface,
It's the same thing now in
no
GST as well.
And we are, and I will tell you,
but that's scrutiny. You know, the question is, there is still discretion. Will you view this as being wrong? Like for a startup, will you view this as being
like I tell you, that how many cases are picked up for scrutiny? It is less than 1%. 99.4% cases are being disposed of without calling anybody to the office, without taking any case in scrutiny. So now it is only 0.6% cases which are picked up for scrutiny considering the risk analysis.
But would you be tempted, I'm asking this to both of you and then we have to end this. I know you have a very busy schedule.
Yeah.
Do you think one of your priorities
Sure.
will continue to be to increase compliance
Definitely.
by just reducing the perception or the actuality of what was once called tax terrorism
No,
and
not at all.
called harassment?
Absolutely, there's no
Is that
tax
still a
terrorism.
priority?
This still is a priority. We are having a lot of outreach programs. Our officers are going to the public. Our officers are going to schools, colleges. We are telling that what are the advantages of coming to the TaxNet. And there's no hassle. We are communicating them that only 0.5% cases are being picked up for scrutiny. Nothing else. Nothing will be asked from you.
Shah Rukh Khan might be asking questions. Look what you're doing to me.
Something will remain as is. There some questions will definitely
the
be
same
asked
thing
about.
applies
We are
in
the
the
tax
GST
department.
for us
and
also.
if it has come into the risk criteria, they will have to face the question.
Same thing applies in the GST regime. I mean, even otherwise on the customs front, we were already doing a lot of automation. In fact, if you see the customs law amendments that have been made this time, we have actually introduced our own customs automated system to not replace, but to be along with a proper office or an officer for scrutiny.
All right. Well, I know we have to leave it there for the moment because you have to be whisked away. So we are going to don't go away too far because the Chief Economic Advisor, the government is about to come in. Mr. Subramanian coming to join us in just a minute or so. So we'll just have the seating change and we'll be back. So don't go away too far. We'll be back in just 1 minute from now. Thank you both so much.
Thank you.
Thank you, sir.
Welcome back. This is our continuing coverage of Budget 2018 and two really special guests now joining us. Chief Economic Advisor Arvind Subramanian, great to have you back with us this week. It was a pleasure hearing you a couple of days back and helping us understand what the economic survey said, and we will be asking you how much of that was actually reflected in the budget and the overall direction that we see. And Secretary of the Department of Economic Affairs, pleasure to have you with us as well, Mr. Subhash Garg. It's
Thank you.
Great to have you with us as well. Subramanian, why don't I start with you? From the economic survey to the budget is often a long leap. A lot of what is said, universal basic income, which you spoke about last year, is still to materialize. What all do you think was really picked up, which you think was noteworthy?
See, I think it's not not something that is particularly important in some sense, right? What is important is what is the government doing, and is it the right thing to do? All of us have ideas. Everyone contributes to the budget making process. So, I don't want to make it too much about the survey or about the Chief Economic Advisor or whatever. But I would say a couple of things. I think 2 or 3 things I think are really important in the budget, which also, of course, get mentioned in the survey. One is that this is a very kind of special year, and the temptations of fiscal populism are great. The fact that the government has said, we are going to consolidate on a steady path like we've had for much of its term, I think that's a very strong signal that the government is committed to macro stability, especially in these uncertain times. Globally, things are a bit uncertain. So to stick to consolidation, I think, and not succumb to populism.
But some slight fiscal slippage there.
No, that was this year.
Yeah,
that was this year, yeah. But for next year, the path is very much one of consolidation. And actually, Subhash will also, talk about what gives the consolidation path going forward more credibility than, even more credibility than perhaps in the past. So that's one thing I think very important. The second thing I would say, it's not directly, the point is that also that, we've been speaking about the fact that asset prices are very elevated and so on. So in that sense, I think the long-term capital gains tax was desirable in itself for a number of reasons that the Honorable FM said in the speech itself. Make in India, the tax base was getting eroded and so on. But also that the timing was very good. Markets seem to have taken it well. So it seems like a very good measure in itself, and the timing seems to have been quite good as well.
The one big idea perhaps in this budget, and I'm going to ask you then where the money is coming from for that. The one big idea, was it the medical insurance, the universal health care, and the fact that we are talking about, actually 500 million people, 5 lakhs per family, actually is a lot. And it is, the finance minister said, it's one of the most ambitious, healthcare schemes anywhere in the world, and that's probably correct. But we've been sort of scratching our head trying to figure out where the money for that is coming. We had Mr. Chidambaram question that as well. Where's the money for that coming from?
See, this scheme is not universal. It's very close to universal. So 10 crore poor and the near poor families are targeted. So rich are still excluded. So these 10 crore families, there's some workings have been done. If you extend them a cover of 5 lakh rupees for tertiary and secondary treatment, and there are a couple of models which are still being discussed and debated about, the trust model, the insurance model, etc. Let's not get into that. The working so far suggests that the government, if it shares in the ratio of, let us say, 60-40 with the states, mind you, many states are presently running this kind of scheme as well. So the working suggests that it should be 4,000 to 5,000 crores rupees for the government of India.
4 to 5,000 crore rupees to insure 500 million people, is that realistic? Because some people have, at least some of the experts whom we had earlier, when they were saying, just thinking about it off the top of their head, what the possible cost could be, their figures are more in the 50,000 to 60,000 crore rupee range. So is 4,000 to 5,000 a safe number?
That's what the Ministry of Health, which has done the calculations so far, suggests to us. And we take it at that at this moment. The earlier experience of RSBY, which was there, though the coverage was small, relatively small, 30,000, but the number covered had also become reasonably large there, suggests that possibly it might be realistic. However, the government remains committed. If it cost more, it would provide more.
But I think also that in terms of financing, the cess has gone up from 3% to 4%. That's going to be one source, right?
Quite right. So
that's an education cess, though.
No, it's been now
no,
been
it's
converted.
now education and health.
So it's both education.
Yeah, and the amount has been increased from 3 to 4%.
3 to 4%. So
yeah.
we made arrangement for financing it, and also some more measures which have been taken for senior citizens and otherwise. There would be funding available for that. But actually how much does it turn out might still, we'll have to wait a little more.
I mean, the only reason the reason I'm asking this question is, you're right when it comes to the path of consolidation. One of the most important things that anybody looks at, whether it's investors or whether it's the rating agencies, is the credibility of the exercise and the credibility of the numbers. Yeah. So therefore, they will be looking at all of this and saying, is there a potential 20,000, 30,000 gap somewhere? Where in the budget would you, I mean, like for example, the assumptions on disinvestment or the assumptions on medical insurance, are all of them seeming reasonable to you? And then I'll throw the same question to him.
Yeah, see, if you look at the revenue projections, which I've just been looking at, I think that both income tax and GST, income tax, I think I think the number is something like 15 or 16% is the income tax growth. GST revenue growth, if you do it kind of properly, it's about 16%. So it's not unrealistic at all. I think but it's predicated on the system actually, the invoice matching, the e-way bill, the system stabilizing, which are not unrealistic assumptions at all.
Right. So coming back to this, if I understood you correctly, you said whatever the price is, the government is committed. So the government will give 5 lakh cover.
Yes.
10 crore, which is like a 10 crore household, which is 500 million individuals. That you are committed to.
Yeah.
And if the money is required is more than 4,000, 5,000, and the government will find the money from somewhere.
Very true.
Is that a fair way
Absolutely.
of summarizing it?
Absolutely.
Is this, to your mind, perhaps the biggest thing in this budget and in several budgets for a while?
No, this is quite big. There are many other announcements also, which are for the farmers, if you would see. That scheme has not been talked about much so far. This Operation Greens, that's also a very major way of transforming the entire way we sort of grow vegetables, process vegetables, take it to the tables, the consumers and all. If you can envision the success of Operation Flood and what it did to the milk, if we can make this Operations Green deliver in the same way, this will transform the vegetable markets in the country, which would make a lot of difference for the farmers. So that's also big. Of course, since the whole objective of raising farmers' incomes requires you to deal with every aspect of it, from cutting cost for the farmers to getting more price to him, getting process things, deliver, getting farmers to do non-farm jobs and other things. So as part of that price also, that announcement I think is also a major announcement.
And I also think that, I think the imposition of the long-term capital gains, is actually also a very important step, signaling lots of things, widening the tax base, trying to treat all kinds of assets and capital gains equally. So, and I remember that it's been talked about often, frequently, but governments have never been able to actually implement it. But this time, I think the government has grasped the nettle.
So that kind of courage
to do that. I think it's a very important step.
I mean, there's some people are happy that old gains have been grandfathered. Otherwise, it would have been retrospective taxation.
Yeah.
But you've had some people saying that, hang on, when you were introducing the STT, you said it was in lieu of long-term capital gains. So have you gone back on an implicit promise?
STT is not the gains taxation. I think we should differentiate it. We had STT and we also had short-term capital gains tax.
Yeah, they weren't the same. But I'm
So
saying when STT was being introduced, it was almost, we are doing away with long-term capital gains tax and we are bringing in STT. That was the way it was painted at that time.
Probably presented a little wrongly, if that was the sense communicated. These are two different. You noted, Finance Minister said we had capital gains of 3,67,000 crores.
Yeah,
right?
It's a huge.
If you get 10% of it, you should have got 36,000 crores. STT delivers you 8 to 9,000 crores only. There is no match. This is not substitute at all.
Okay, but now, of course, those 3,60,000 are grandfathered, just to be clear.
Exactly.
Yes, those are grandfathered.
That's grandfathered. Now it's the next 3,60,000, which hopefully will come, where people have to pay tax.
And
just wanted to ask
remember
you,
now, this is not going to be indexed in future. So as you go along in future, the gains will deliver, this tax will deliver much more.
Okay, that's an interesting way. Just to look at some of the issues which were there in the economy, the landscape which presumably the finance minister was trying to deal with, and you laid it out in your economic survey. Obviously, farmers' distress, farmers' crisis, problems in rural India, that's one, and there seemed to be a lot of packages for that. The second was joblessness and the increasing crisis that we might be facing with jobless growth. Was enough done on both these fronts, according to you?
See, Subhash has spoken about the agriculture. On the job front, I think there were a number of measures announced in terms of clothing, leather, textiles, contributions for new employment by the government. So those are all aimed at employment generation. But see, remember the broader point, of course, is that the best way to generate sustained employment growth is to have rapid economic growth, bring back the investment cycle, exports starting to pick up, and that's the most durable way. I mean, obviously you have to complement that with other actions, and some of that maybe Subhash can spell out in terms of what was done for textiles, employment, the contributions and so on. But I think, we've moved in that direction.
I think let's remember the employment or the jobs are not there in the government and the organized sector to grow much. That's if you would see our numbers, we are at 35 lakhs for last 3 years. government has grown slightly but can't grow more. Organized sector is highly capital intensive, that's not job intensive. And therefore, the jobs as well as value addition, which is can come basically in the MSMEs and taking the farmers away to the jobs like construction and others.
Yeah.
The data points out, and economic surveys delved into the GST data very well to bring out how our formal economy is actually much more than what we believe.
Yeah.
The other data done by the IIM professors also bring out that we are adding actually about 70 lakh jobs in a year. So in a situation where we have about 10 million, so 1 crore people joining a year in the job market, and 60-70 lakh jobs getting created in this way, suggests to us actually that there is a lot of jobs growth in the economy. The situation is not. What some of our friends say that it's the problem of wages being low rather than jobs not being there. So that is what is happening, and the government has done quite a lot in this budget. You would have noted number of measures have been announced to see the MSMEs grow, the Mudra loans grow. So
we'll have to see. We'll have to see how all of this pans out. I'm conscious that you both have to leave in a couple of minutes. One last quick question to you. Part of the thrust that I think many people would be hoping that not just this budget, but the government in general keeps pushing for, greater ease, simplicity, less regulation, less complexity, less litigation. I was struck by the figure in the survey saying 85% of all litigation is government litigation and only wins 20%. I mean, it's not necessarily everything that should be done in the budget alone, but is that going to be pretty much the thrust you hope going forward?
Yes, but I just want to answer that by just stepping back. Remember, one of the things that we shouldn't also forget, and there's a point that we've made in the survey as well, and we've discussed, is that the government has embarked on a number of things, even unrelated to the budget. Whether it's stabilizing the GST, the resolution, the recapitalization, privatization agenda. So there's a lot on the policy agenda for this year, which, if completed, would actually contribute to all the objectives of growth and employment generation and so on. So we should always place,
Budget's only one part of it.
One part of it. And
of course, that's larger.
Yeah. Yeah.
That's a larger government.
Huge agenda, and in this instance, there's some very specific things that the government has embarked upon, like addressing the twin balance sheet challenge by resolution, recapitalization, reforms. That's a big agenda, and I think if that's done, this would be a no mean achievement for this year.
Right, Mr. Garg.
Thank you.
Thank you both so much for joining us. Thank you so much for having been with us. Welcome back to this very special program where we are speaking to all the top economic policy thinkers and people behind the budget and people who are actually implementing the entire economic strategy of the government. And now it's a very great pleasure to welcome Finance Secretary Hasmukhadia, who's also the person behind GST and the person who pushed it through. So I'm going to take the occasion to also ask you, I know it's not directly linked to the budget, but I am going to take the opportunity to ask you a question or two on that. And Expenditure Secretary, Mr. Ajay Narayan Jha, it's a pleasure, sir, to have you with us. Mr. Ajay, I just wanted to first of all get your own internal sense of what do you think was the overall message you were trying to get ahead with the budget and the big points that you think the budget was about?
The message we wanted to give is that when it comes to helping the rural economy, we will not compromise on expenditure. That was the first message we wanted to give in this budget. Even as you saw, we had a choice. We could have cut expenditure in the current year, we could have cut expenditure in the next year. But we decided to relax our fiscal deficit also, for which this government is known, by a margin, only 0.3%, although in case of structural reforms, the encassing committee had given us the liberty to increase up to 0.5. But we did not go whole hog. We decided to keep it to 0.3. But we didn't want to compromise on the expenditure which is to be made for the rural economy. And next year's budget also is all about pumping in more activity, more money in the rural area so that the people are better off there. So that's the key message.
And that, in a sense, also reflects what many people have been saying, that there's farmers' distress, there's rural sector distress, and from a political point of view, I guess that's not what you want 1 year ahead of the election. So if you could just tell us the key things in that spending on the farmers that you think will actually make a difference on the ground.
See, there are a lot of things which we have put as a package for the agro-farm sector. On the agriculture side, you have the crop insurance scheme and the interest subsidy schemes, which are big ticket items which are already underway. We are providing extra money for horticulture, which the finance minister announced as a green Operation Greens. Some additional money has been provided for that. There's a lot of money which has been pumped into the food processing center to set up the value chain of agriculture, marketing and processing. The food processing budget has been almost doubled from 700 crores to 1400 crores. Apart from this, you have the the RSBY, which is the scheme for the states for the farm sector. That has been also funded generously.
Right. So in a number of steps out there for the farm sector, the headline item, according to many people in this budget, though, was that the health insurance scheme. Right, 100 million households, 500 million people getting insurance at 5 lakh rupees cover per family. That's a big bang step. But even now, I was asking that question just a short while back to Mr. Garg as well. There's still questions as to where the money is going to come from and how much money it will take. If you're assuming 4,000 to 5,000 crore rupees will be the money that will be required for that, is that enough or is that too conservative?
Well, let me tell you that when you insure a large group of people, such as 10 crore people are being insured, the premiums definitely come down because the chances of everybody falling sick is not there. So the larger the group, the lower the premium. This is the rule of the insurance industry. So the idea of covering large number of people is this. So we may decide to go in for an insurance model or a trust model or a combination of the both, depending on the comfort of the state. So the whole implementation will be, the action will be at the state level. Guidelines will be given by Government of India. The state can choose either the trust model or the insurance model, and it would be a centrally sponsored scheme. So there will be a sharing of 60-40. So states will also put in their bit, and the amount of premium we expect is not going to be high for covering so many people,
So, obviously some of the money the states are already spending. There are states which have this
scheme. So they will combine with this scheme.
And you are combining, you're taking off from your GST example by involving the states directly in this, which is always a good idea. But I'm just trying to understand, the premiums you're saying will not be that large. Of 500 million people getting effective health insurance, the sum of 5,000 crore rupees still sounds low.
No,
that
because
what you are assuming?
It's only a token provision this year because it will take us at least 6 months to roll out. At least 6 months. It may be possible maybe by October or so. So the entire modality will have to be worked out by Health Ministry in consultation with states. And then after that also the time taken in fixing up an insurer by tender procedure, that also may take some time. So this year, maybe the full year will not be available, and that's why we have put some token provision, but that doesn't deter us from making extra provision. Mr. Jha is very willing to give more money if the need be.
It's a very large token provision. What is the 2,000 crores we have put already as a commitment for this scheme?
So that's what I'm wondering, is 2,000 crores really enough for a scheme like this?
He had prefaced it by saying it's a token provision. So it will be stepped up as we define the contours of the scheme.
So it's not that you're limiting it. You're not going to limit the cover. I asked that earlier. You're very clear that you will not limit it. If more is required, you will put the money in for that.
It's a commitment of the government. It's a commitment of the government, and we are sure that we will be able to fulfill it.
Right. On the implementation, which is an area where always question comes on, when you're spending money, are you making sure that enough money is getting there? And that question still arises around all the subsidies where a lot of money is being spent. Interest, obviously, a lot of money is being spent there. But any thoughts on how that targeted spending is going up? Did you think at all about trying to find other ways of providing the subsidies so that it doesn't get filtered off?
You see, targeted spending is taking place through various means. And one of the biggest achievements in the last few years has been the direct benefit transfer. Increasingly, more and more schemes, almost 410 schemes are on board under the direct benefit transfer. Manrega has been a huge success in terms of transferring money right down to the beneficiaries with a time lag of only 7 to 8 days. So the money from the central kitty goes to the beneficiary on this account. Similarly, other schemes have been designed where targeted spending is taking place. And just for your information, this year, by end of December, we had spent almost 80% of the budget. And it's not that it's not been spent, it has been spent on the ground.
Some people were talking about the fact that defense spending has not gone up too much. Was that a deliberate step? I mean, only in line with inflation. Is that the amount that is really required?
Defense spending overall, if you see the overall defense budget, which includes the defense revenue expenditure, pensions, capital, and defense miscellaneous, as it's called, it's gone up by about 9%. For the first time, defense capital has not been reduced in the revised estimates, which has taken place after, I think about 7 or 8 years have elapsed since the budget had been kept intact. Next year, we have given them a generous increase on the capital side. And revenue side, of course, the salary requirements have been met. Pension has gone up substantially on the defense side. That has been fully covered because there's a large demand which we have to meet through that OROP commitment on defense pensions.
Well, Mr. Adya, one of the reasons why this budget was perhaps feeling different to people from normal budgets is all that stuff that normally happens on indirect taxation is not there this time, right? No excise duty changes, none of that, because all of that is there in the GST. Now, as the person who's really piloted that landmark move through, I have to ask you now that you're with us, how do you think it's going so far? It's what, 6 months now?
GST has settled down smoother earlier than what we expected. In fact, in most of the countries when GST is introduced, there is some sort of upheaval for a period of 2 years at least. But in our country, fortunately, it settled down very well so far. One of the reasons for this is that the government and the GST Council has been quick enough to make changes wherever it is due. And that's why the people have found quick relief in that. We struggle with technology issues.
So those frequent changes are actually a good thing,
it's
you're
a
saying,
good
because
thing,
it means it shows that the government's being proactive.
Yeah, we're being flexible. So if we realize that, yes, people have got genuine hardships being faced, we are willing to change. And that's the case even now.
Right. I have to ask you, a couple of the things that were there in the GST, which I remember even at the time it was being launched, I was interviewing you and you said, we're going to try and do something about it at the appropriate time. 2 issues. Number one, just the psychological impact of having 37 returns. So even if you're, as you said, that it's actually one, but it's seeming like a lot. So any simplification of that, and also a consolidation of rates, which again you had said you will try and do at the appropriate time. When is the appropriate time going to be there for both of these?
Well, for the first one, already we realized that this return 1, 2, 3 cycle is not going to work. And so we quickly gave it up in the first few months only. And now we are having only one return of 3B being filed by everybody every month. For the next year, we are planning even a simpler version. In fact, one of the ideas which has been brought by Nandan Nilekani from Infosys is that why don't you gel it with the business process itself? Everybody generates invoice, everybody makes payment to the seller. This process of raising an invoice, if it is done electronically, then there is no need for anybody to file a separate return. That itself, the way the return is raised, it may be electronically recorded and then that goes into the system. The return will be automatically prepared by the system. Nobody needs to do anything else.
But what if there's an invoice which is not electronically generated?
No, one can put the details of that electronically.
You
need not generate.
Some invoices are electronically generated. Yeah. Those which are not electronically generated, you have to
create an Excel file and upload it, So if everybody puts their sales invoice on the system, by whatever method, either they are electronically generated or they are in an Excel sheet. If it is uploaded, then entire system will be taken care of thereafter. The input tax credit based on the invoices which your sellers have put in the system, you will get. And so your return will be automatically generated by the system. You don't have to do anything.
The consolidation of rates, because frankly that's confusing right now. Everyone is scratching their heads and saying, should it be this, should it be that? And even 6 months later that they're still scratching their heads.
Well, we too realize that, multiplicity of rate will always mean some classification disputes. But the question is that now we are already moving in the direction of reducing maximum number of items from 28 to 18. Now in 28% things, what is left is automobiles, cement, paints, and cigarettes, which are demerit goods, and other things, the luxury items. So other than that, everything has moved to 18% now. We must work in the direction of bringing it closer, but the main challenge is not 28 to 18%. The main challenge is bringing those items of 5% and 12%, which are consumed by poor people, into the 17 or 18% slab. That is where the challenge lies. And we don't want to make our GST so regressive for the poor to begin with that they resent it, So it will have to be done over a period.
But you think compliance has picked up sharply?
Compliance has picked up sharply. In fact, we are now, up to 31st, because we gave figures up to 24th, this one, we're almost close to 90,000 crore this year, this month, up to 31st.
Those are big numbers. Any final thoughts on where you're spending the money, which you think any other major changes which perhaps haven't got the attention that they should? Any headline item that you think?
Yeah, of course. There are three areas which I think where this budget is very different. One is the raising of extra budgetary resources to fund educational institutions and health care.
Yeah.
We have an agency called HIFA, Higher Education Funding Agency, which was announced last year. Now that has been strengthened, and now it will encompass even medical institution aims, etc. So that's a big change this year. The second change is that the social protection schemes have been further strengthened, and budgetary support has been added. The numbers the finance minister announced was the gross numbers of under the provisioning which is being done for the scheduled caste and the scheduled tribes, and even the budgetary support. Third is northeastern region, tourism. These are sectors which had not received the attention which the government was expected to give. The budget provisions in all these cases have been increased substantially. More than, I would say, the nominal growth rate of the GDP.
Right, Mr. Adi, one last question before we allow you to go. Farmer sector, rural spending, you started off also by saying is one of the big thrust areas. I'm sure somewhere at the back of your mind, the other big question would have been is what is happening on employment and joblessness. Now, I know the latest data that's come from EPFO and all is saying maybe the problem is not as severe it is, but there's some contention and debate about it. What have been your thoughts on that, and is this budget, has it taken enough steps to try and ensure that employment will continue to grow fast?
Well, employment is always a function of GDP growth rate. I always think so. That is one major parameter for creation of employment. When we are doing GST, when we are creating ease of doing business in India, and when we are reducing our tax structure, I'm sure a lot more investment will come and a lot more GDP will grow. Again, GDP growth is also a function of demand creation. So we have to do something consciously to create demand also. So what we have done in this budget is that we want to pump in as much money as possible in the rural economy so that there is a consumer demand creation in the rural economy. And that in turn will spur demands, and demand will bring in more investment. Now this is going to be, and investment will bring in more employment. Whenever there is more GDP growth rate and more investment, the employment automatically goes.
So kickstarting investment remains a major priority of what you're doing. So you have to find that out, get the investment going, get GDP growing, and you're seeing employment will, will necessarily follow.
That's right.
Right, Mr. Adhya, thank you so much for joining us. Thank you, sir, so much for being with us as well. And I'm going to leave it there for the moment. But Nidhi, let me hand it back for you. We are hearing from the top economic thinkers in the government and the people who are actually pushing it through, some of the thought process behind what the budget was. And we've also got answers now to what I guess is going to be called Modi Care, that ambitious scheme to actually provide health care to 500 million Indians. We've got some answers now from the government as to how they think they're going to be funding it and taking it forward. The initial allocation, 2,000 crore rupees right now, but that's a token allocation because they're saying it is only going to be 6 months worth of, by the time it gets the scheme gets off the ground, 6 months will have passed. And then if more money is required, more money will be allocated.